increase in the corporate minimum tax. That was a new one from him as well. And there were some littler nuggets too, like getting rid of title insurance on federally backed mortgages. That sort of falls, I guess, generally under the Biden junk fees effort. But, you know, he sort of had the makings of his re-election platform there. The big, one of the big stakes of the 2024 election is that 2025 is going to be a year where Washington's going to be talking about tax reform. Some of the provisions of those Trump tax cuts expire. The question will be, does anyone want to do anything about that or not? So Joe Biden is sort of staking out his lane on that, and that lane is consistent with where they've been before, right? Biden has always said no taxes on people making no tax increases on people making under 400 grand. Of course, then that if they want to raise more revenue, which this White House does, that means they're taxing corporations and higher earners and the wealthy instead to try to make up that gap and shrink the deficit. We'll be looking, of course, at the projections in that budget as well. We reported this week that there was a bit of wrangling in the White House on this question about how to set the projections, in particular the interest rate projection, and that Lael Brainerd, the NEC director, pressed for a lower rate in a meeting where those rates are typically set by a group that does not include the NEC directors. So a bit of palace intrigue on that. So we'll be watching for that on Monday as well, what those numbers look like.
What's the intrigue around the border right now, Josh? There was a lot of pressure for Joe Biden to do something or maybe announce an executive action last night. Did we get his answer past the bill that the Senate passed?
We did. They've been batting away these questions of what, executive authority. Conservatives want him to use so-called Section 212F powers. The administration says basically that's not a tree we want to bark up, because if those powers do exist and not a lot of people are really sure, it's sort of a surefire legal challenge. So he's saying essentially, I'm the one that wants to pass a bill, Republicans are the one that don't want to pass a bill, and he's trying to sort of do that backflip, of course, because for the last couple of years, Republicans have been the ones calling for something and Democrats haven't. But one of the gaffes from last night also was on this question. It was interesting. Marjorie Taylor Greene was asking him to address the case of a woman killed by a migrant, and Biden did talk about it, and then he referred to the migrant in question as an illegal. He's getting pushback from Democratic members of Congress right now who don't like that word for describing people of undocumented status, even people who've been accused of murder.
He seemed to make use of that prop pretty well, even if the language caused people to bristle. You look like Clark Kent on the North Lawn, Josh Wingrove.
Well, you could put a string.
Except he wished he had a voice like that, Kaylee.
Yeah.
Yes, of course.
Thank you.
All right, Josh, thanks for joining us after what was a very long evening from the White House. We appreciate your time. And now we want to go to someone else who I'm sure was listening to the speech. Maya McGinnis, the Committee for a Responsible Federal Budget president, is joining us now. Maya, first and foremost, happy International Women's Day. Thank you for joining us on this day of all days. And it's worth pointing out that the president last night, when he was talking about some of his economic policy, he said he has been delivering real results in fiscally responsible ways. To what extent is that true?
Yeah, he made a number of claims on fiscal policy, and I guess I'll start by saying it's good he was even talking about it. Every time we go into a State of the Union, we're sitting there wondering, is someone even going to mention the near record levels of debt we have? That said, he had quite a mixed bag of how honest the different claims he made were. The first one he talked about is something he's done before. He took credit for reducing the deficit. And said that he'd reduced the deficit by more than $1 trillion between 2021, 2022, when the deficit came down. That one is absolutely false, in that the deficit did come down because our huge amount of spending for COVID was running off. And if you look at actually the policies the president put in place, he overall made that situation worse. So no, he doesn't get credit for reducing that deficit. Second thing he said was that he had signed into law legislation that reduced the deficit by another $1 trillion. That one's true. The Fiscal Responsibility Act will bring the debt trajectory down by $1 to $2 trillion if we stick with it. But it's fair to say that was really originated with Republicans, and that the Biden administration kind of came along kicking and screaming. But we're seeing that will generate real savings. Two other big things he said: that the Trump administration had added huge amounts to the debt. Absolutely. $8.4 trillion signed into law during the Trump administration. That is a record level. And the last thing was some big accusations of Republicans on Social Security wanting to cut benefits. I don't know a single politician who's talking about cutting benefits for current retirees. I'll tell you, two politicians who are not talking about fixing the program, which we absolutely must do, are both Biden and Trump. And unfortunately, this election is shaping up to be one where nobody's talking honestly about Social Security. And hopefully that will change, or that's going to leave the people who depend on it awfully vulnerable.
The lockbox will stay locked for now, Maya. I hate to sound like a broken record because I always feel like I have to ask you this, but revenue did come up last night, a new swing at a minimum corporate tax, higher taxes on the wealthy, a minimum billionaires tax, as he called it. Is that music to the committee?
Absolutely. We are sort of policy neutral and pro-deficit reduction. So anybody from any end of the ideological spectrum who's putting forth things that would reduce the deficit at a time when we're at near record levels, interest payments are bigger than defense. I could go on and on about why we have to. Absolutely, that's the right thing to do. What I do worry about is pretending we can fix this whole problem by taxing millionaires and billionaires. That's not how it's going to work. We have to cut spending. We have to fix Social Security and Medicare. There are going to be middle-class revenue increases when we finally get serious about this. So great to talk about things you would do to make a difference. You can only tax millionaires and billionaires so much. And I worry when people, it's like waste, fraud, and abuse. Like, we should do it, but it's not going to fix the problem on its own. We're going to have to go a lot farther. But I think that will be the big piece of their budget that will lead to deficit reduction because of the large taxes they will put in place in the budget.
Well, what else would you like to see in that budget, if not on the revenue raising side, on the actual spending side, keeping in mind that it is today that we do expect the Senate is going to pass the first 6 bill megabus? We're going with megabus, Joe?
Let's do it.
The
you
bus.
And I will call it a megabus.
The first bus. We're still waiting on the second bus by March 22nd, at which point we'll be, 8 days shy of being halfway through this fiscal year. Maya, so when we're thinking about spending and just A, the dysfunction around getting spending bills done, but B, the trajectory of spending, how dissatisfied are you with what you're seeing?
Yeah, well, I guess it's a kind of a medium bus, and I'm totally dissatisfied with this process. The fact that we're still working on last year's budget. The House put out a budget. Its budget committee put out a budget yesterday. The Senate Budget Committee never even put out a budget last year. But the House did it before the president did, which is the wrong order. No one takes the budget seriously. The process is a disaster. But you're asking me to lay out the hard things that our politicians aren't going to talk about. What should we actually do? So here we go. The Fiscal Responsibility Act, right? First step, we do have to put caps on discretionary spending. That is going to help keep the huge growth in that area of the budget down. But it's really the least of our worries. So we quickly have to turn to mandatory spending. Social Security goes insolvent in 10 years. We need to look at whether we should slow the growth of benefits for people who don't need them so we can preserve them for people who do. Should we, for younger workers, look at raising the retirement age? Yes, the answer is yes. And should we talk about lifting the payroll tax cap so you pay higher than the cap right now? Absolutely. All of those things are going to need to be employed to fix Social Security. Also, probably changing the way we evaluate inflation and maybe bumping up a minimum benefit. We need massive cost savings in healthcare. There are a lot of ideas of ways we can do that before they even have to affect beneficiaries, ways to have savings in the system. We should look through that. National security, there's so many things we can do that will lead to more savings. That said, it's a rough time in the world right now, and my suspicion is that any savings we can generate will ultimately have to be plowed back into all of the hot spots around the world, cybersecurity, AI, all these different things. And we're going to need more revenues. Like I said, it's not just at the high end, it's not just corporations. We're going to have to talk about broader taxes, whether it's a carbon tax or getting rid of the almost $2 trillion in tax breaks we have every single year. That's a good one because you can raise a lot of revenues that actually wouldn't necessarily harm economic growth. But just my main point is, with that laundry list that no politician will say, is we got to get real. We got to stop promising what we're not going to do. Our debt is growing faster than our economy. It leaves us really vulnerable. And I just wish we could start this discussion in earnest because none of these things are easy and all of them are going to have to be looked at.
I can only imagine what lawmakers say when you're alone, Maya, about this issue. I'm guessing they agree with everything you're saying, and then they show up for work, and we kick the can again. With the Committee for a Responsible Federal Budget, the president, of course, Maya McGinnis. We always learn something when we spend time with you, Maya. Thanks for being with us here on Bloomberg. The Senate moves today, as you mentioned, Kaylee. Then we do it all over again. We come back next week for the second half.
The 22nd. We technically have 2 weeks now to figure out the next
You'd like to
6
think they
bills.
might work on it next week.
Well, one would think. They typically run it right up to the deadline in this Congress. But yes, it's going to be a fun 2 weeks
She
because
said
this week
medium
wasn't
bus?
enough. Medium bus.
You go so there's a minibus, medium bus, omnibus
They're all buses.
on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. A choppy trading session. The Dow has been fluctuating between gains and losses. Right now back in the red. We have got the Dow down 12, drop there of less than 0.1%. S&P moving lower by 25, on track for a losing week, down 0.5%, while the NASDAQ Composite Index is down 162, a drop right now of 1%. Stocks edge lower after a rally that drove the market to multiple records this year. Traders weighing showing mixed jobs data. The 10-year yield 4.08% with a 2-year 4.48%. Spot gold now up 0.8%, 21,078 on gold. West Texas Intermediate crude down 1.2%, 77.97 a barrel. Bitcoin, big story there, was trading above 70,000 briefly. Right now, Bitcoin up 2% at 68,640 on Bitcoin. Tesla's support among Wall Street bulls is weakening, with the lowest percentage of analysts since April of 2021 recommending that investors buy the stock. Just 20 of the 59 analysts covering Tesla have buy ratings on the stock. Tesla today lower by another 1.5%. Again, recapping, S&P down 25 now, a drop of 0.5%. Balance of power continues on this Jobs Friday. Back we go to Washington, and once again, Joe Matthew and Kaylee Lines.
Charlie Pellet, thank you. I have to mention breaking news before we assembled our panel, get back into the State of the Union address last night. We're still picking up the pieces from the big night on Capitol Hill as the president makes his way to Philadelphia today to start the road show. Headline crossing the terminal, courtesy the Associated Press. Third-party movement, no labels, says it will field a presidential ticket. I'm Joe Matthew alongside Kaylee Lines here on Bloomberg TV and radio, live from Washington. This is exactly what they said they were going to do. They said it on this program. If we get through Super Tuesday, and these are the two, Trump and Biden, we're running a candidate. The problem is they don't have one.
Right. It's happening. We just don't know who it's happening with. We have no idea what this unity ticket is actually going to bring, who's going to be on it. We just know who's not, because there are many people who have ruled themselves out. Joe Manchin, Mitt Romney, Larry Hogan, he's running for Senate in Maryland, even Kirsten Sinema. Mm-hmm. So who's
no Nikki, no Dean
left?
Phillips.
Yeah.
I don't know. Maybe it's not a politician. Look, we'll find out on this one. I don't know how they're going to get on the ballot across the country either. But when you talk about unity ticket, we heard something that seemed new last night.
Unity agenda.
Unity agenda. How did that hit you in the speech? Is that part of the new stump speech?
Well, I perked up and thought, is this it?
Yeah.
Is this going to be one of the mottos of the campaign? And I did wonder when he said that, if he was talking about unity within his own party, unity between the U.S. and our allies, unity of trying to bridge the divide between Democrats and Republicans, also keeping in mind that President Biden was making this speech after receiving the knowledge that Nikki Haley had left the presidential race, that meant Trump was likely who he was going to be facing in November, and that they both were going to have to vie to bring Nikki Haley voters into the fold. And how much of his speech last night was aimed at that Nikki Haley voter and trying to bring them onto his side.
I know who to ask.
You do?
Let's bring in the panel. Jeannie Shanzano is with us, Bloomberg Politics contributor, Democratic analyst, joined today by Maura Gillespie at Blue Stack Strategies, Republican strategist who spent time working for the Speaker of the House when John Boehner held the gavel. It's great to have you both with us here. Maura, your thoughts on that? Because I think I know where Kaylee is going here, as the president used the word illegal when he was talking about an undocumented immigrant after he was goaded in that direction by Marjorie Taylor Greene. There were other moments as well last evening when he might not have sounded like a progressive, in fact, upset some members of his own conference. I was talking about this earlier with Kaylee in the newsroom. Is that by design?
I do think so. I think that when I heard those words, unity, I was wondering would he reach out to the Nikki Haley voters in that moment. But also harkening back to what he ran on was bringing the country together after chaos and, maybe restoring that kind of messaging, last night. I don't know that it was as effective as maybe he had hoped or his team had hoped. But he did hit on a couple of themes that would appeal to Nikki Haley voters, talking about and having, obviously Sweden there after the news about them joining NATO, having them there in the box next to the First Lady, Jill Biden. So that was an effective tool, reminding people of the important role we have in our foreign policy and having a strong foreign policy and standing up against Putin and against Russia. But also the IVF conversation, I thought was definitely a nod to not only his party, but also to Nikki Haley voters. She has been pretty outspoken on the outdated ways that Republicans talk about abortion and just really women's health in general, talking about taking, women's personal freedom away. So he really did hit on that, I think, and appealing to Nikki voters for sure.
Well, and Jeannie, he did so without actually saying the word abortion. He skipped over that. He was just talking about reproductive rights. And I guess this gets at the same question. Do you think that was by design, and do you think it will prove effective?
Yeah, it definitely was by design. I mean, as we all know, Joe Biden is a Catholic. He has, said many times that he personally is opposed to abortion, but he supports a woman's right to choose. And even beyond that, I think politically, the reality is that Americans.
So the US Senate secures enough votes to advance the bill to fund parts of the government, averting a partial shutdown. Again, voting does continue.
And they are right to couch this as the freedom for a woman, a person, to make this decision with their doctor. And that decision doesn't just have to be about abortion. It can be about reproductive rights overall. It can be about taking contraception. It could be about who you're going to marry. And that's the point he's trying to make about Dobbs, is that decision opened a can of worms, according to many Americans, that the states have walked through in limiting our freedoms, and he is promising to restore those.
Well, even in the Republican response delivered by a senator from Alabama, where IVF has definitely come to the forefront of thought after the Supreme Court ruling there, Senator Katie Britt did talk about IVF and the importance of protecting that. She also, though, talked about a lot of other things, and as I'm sure we have all seen on social media, her speech in its entirety has been chopped up into some remarkable pieces. But one thing she really did try to draw a contrast with what President Biden said 40 minutes into his speech, finally getting to the issue of the border and immigration, was that very issue. Here is just a taste of what she had to say after the president's address.
President Biden's border policies are a disgrace. This crisis is despicable. And the truth is, it is almost entirely preventable.
Just, you could hear there and even see to some extent the degree to which she was emoting during this speech last night. And Maura, I would love to get your reaction. This is Senator Katie Britt, the youngest ever Republican woman elected to that body. She is just 42 years old. She's pretty popular, serves on McConnell's leadership team. Did the rising star rise to the occasion?
No, and I'm disappointed because I had high hopes for her. And again, I think that she just wasn't authentically herself. It was very theatrical and overly emotive to the point where it's not actually helpful. To not take away from the stories, unfortunately, because what she was talking about is a real issue. And I don't think that President Biden hit on this at all really enough last night in his speech, not taking responsibility and giving us forward action about what's going to happen at the border. I think he really missed the mark there. And she could have capitalized on that in a more impactful way had she not been so, really just a little bit all over the place, going from smiling to sad to angry. She really went through it in a matter of 10 seconds at a time. So it was hard to take it seriously. And that's disappointing considering the fact that we have really grave concerns about the crisis at the border, and families are struggling to understand how something that happened, to Larkin Riley is not, being addressed right this second.
I'll tell you, you think back, Jeannie, when was the last successful response to a State of the Union? Either party. You got to go back in time. I was racking my brain. Everyone's showing images of Marco Rubio with the water bottle and Bobby Jindal and the foyer of the mansion. Maybe it was Governor Bob McDonnell of Virginia, and of course he ran into some problems in his career after that, but he followed Barack Obama with pretty strong optics, what looked like him speaking to the General Assembly. Maybe that was I'll have to think more about it, but I need your take on this, Jeannie. She's sitting in the kitchen. This is clearly something that was scripted way in advance. She rehearsed it a lot of times. Did it work for anyone?
I think it possibly could have worked for the base of the Republican Party. And, that is the challenge here, is that so many of us looked at that speech, and putting aside the content of what she said, which I obviously had problems with, the way in which she presented seemed just not in keeping with who she is and who she has become politically, which is a young, vibrant, respected, smart woman who became the youngest senator in, the country. She has really made a mark. And you didn't see that last night as they placed her in a kitchen the night before International Women's Day and had her, some people described as, looking like a forlorn housewife, going between laughing and weeping very, very quickly. And it just wasn't authentic to who she is. And to your point, Joe, it's been a really, really difficult speech for people to give. I agree with you, Bob McDonald, probably the most effective. When this started in the 60s, it was, people just speaking in the opposition, sort of like boring old senators and members speaking out. And then in the, 80s, 90s, they tried to make it a little more dramatic. It is not working. They must go back to boring because they have lost their way on this speech. And it is really the death knell. And in many cases for young, promising public officials. And that is frustrating to so many of us who want to see these people succeed.
Maura, we have less than a minute left, but to Jeannie's point about the idea of her being in a kitchen, and I understand the point she's making on the housewife thing, but it also was her literally sitting at a kitchen table talking about kitchen table issues, right? She was talking about the price of groceries, about immigration, which we know is top of mind for voters. This is the playbook that Republicans will be using as they are competing on the ballot in the lead up to November, right?
It didn't look like she was sitting at the kitchen table. It looked like she was placed in the kitchen. So I don't think that her team did a really good job of that aspect. They could have made that a little more clear, maybe had her background be like the living room or something and show that she was actually at a home in a kitchen table. They could have done it differently. But yes, it does optically not make me, as a Republican woman, pretty happy to see that, because I do think that it sends the wrong message. And for somebody like Katie Britt, who could be a rising star in the Republican Party, last night was just not good for her or her future, quite frankly.
All right, Maura Gillespie and Jeannie Shanzano, thank you both so much for joining us, our political panel on this day after the State of the Union and International Women's Day. We appreciate it. And now we want to head over to Amy Morris in the Bloomberg 99.1 newsroom with a check on world and national news. Hey, Amy.
Hey, Kaylee, President Biden laid out his vision for the nation as he heads into another general election campaign. Opening his third State of the Union address last night, warning of threats to democracy both at home and abroad, citing the war in Ukraine and January 6th rioters. He never mentioned his political rival, Donald Trump, by name and referred to his predecessor, accusing him of running a campaign of revenge and retribution. Donald Trump, meanwhile, secured a more than $91 million bond to delay executing the verdict in the defamation lawsuit against him while he appeals. He also filed a notice of appeal in the case, asking the court to put that verdict on hold. And the third-party presidential movement No Labels has decided to field a presidential candidate in the 2024 election. No Labels is not expected to name its presidential and vice presidential nominees today. Come up with that later. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Regional sports networks. There's it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, it doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
DOJ or other authorities
could face bigger challenges next.
That was going to keep Green World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. Worst level of the day right now for the Dow, the S&P, NASDAQ 100 index. The NASDAQ 100 index now down 1.6%, right to the numbers here with the S&P falling 37, now at 51.19, down 0.7%. We are on track for a losing week for the S&P 500 index. Dow Industrials down 68, decline there of 0.2%. The NASDAQ Composite Index down 1.3%, lower now by 205 points. Stocks are retreating after a rally that drove the market to multiple records this year as traders weighed mixed jobs data. Today, the 10-year yield 4.07%, the 2-year 4.46. We have got spot gold trading higher by 0.9%, 21.79 right now on gold, and West Texas Intermediate crude is down 1.5%. WTI right now 77.73 a barrel. Gap shares are trading higher after reporting fourth quarter earnings that exceeded expectations, a sign that efforts to turn the apparel retailer around are bearing fruit. Gap shares up now by 3.4%. Bottom line, stocks lower across the board right now. Lows of the day with the S&P down now by 0.7%. Balance of power continues. Back we go to Washington, and once again, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. Welcome back to Balance of Power on Bloomberg Television and Radio, live from Washington, where it is post-State of the Union Day, but it is also, Joe, Jobs Day, and especially for a president who made the economy one of the real immediate features of this speech. It was the third subject he brought up in his address last night, the strength of the economy. We know this administration has continually touted an unemployment rate that has remained 4% for a stretch of time we haven't seen going back decades, and yet we're right there, according to this month's jobs report, 3.9%. Unemployment higher than expected, still below that 4% threshold, but that's not exactly the direction the administration is probably cheering.
2-year high, right? On that metric. We spoke earlier with Heather Boucher from the Council of Economic Advisors at the White House, and she's pointing to participation. More people get into the workforce. You know how this goes, and they're suddenly counted, and because they're looking, it can give you a bit of a false impression. But we got a lot of layoffs in that number too. So you can look at this a couple of different ways. If you're the Biden administration, you see a stronger than expected job market. It's as simple as that, though.
Sure. You look at the headline figure for this month, maybe not the revisions for the month prior. As always, you can pick your narrative and run with it. And that's how politics works. It's all spin.
Well, for sure. Although, look, stronger than expected payrolls. We'll take that at its face here. I don't know. David Weston is with us from New York because push and pull is how it was being described earlier by Jody Schneider, our political director. Molly Smith went with that good news, bad news look here, David. But when you step back, of course, our friend, the host of Bloomberg Wall Street Week, and you think about what predictions were, what Elizabeth Warren might have been saying would happen to the job market following this historic run of interest rate hikes, this thing continues to defy gravity. It looks like it's indestructible in some months, doesn't it?
Well, I think that's exactly right. If you remember last week, I asked Mary Daly, given where the economy is, despite all your rate hikes, why are you talking about cutting rates? And I think, if anything, this sort of confirms what we heard from Jay Powell in his 2 days of testimony this week, which is he'd rather wait for the data. There's nothing I see in these data that really demonstrates he must go one way or the other. I think it keeps optionality for the Federal Reserve, in my humble opinion.
Yeah, and I wonder if it's actually going to be the inflation data of next week that might be more directive in terms of what it's likely to mean for the Federal Reserve. We got CPI coming up on Tuesday, PPI coming up on Wednesday. It never ends, does it, David? Nor does the Fed speak, except for when they're in the quiet period. And we ought to parse through it all.
Yeah, and it's my impression right now is on the CPI, as well as all the other indicators that they have, is it's coming down, but it's not coming down that fast. They're not coming down to 2% yet, which is what Jay Powell keeps saying is still his intention. He wants to get down to 2%. He doesn't back off that number, and I don't think we're there yet.
Wall Street Week, of course, follows Balance of Power coming up at 6 o'clock, and we talk every week with David about what we're going to learn here. This is all baked into the conversation, the political conversation here in Washington, David, as the president starts the roadshow now. His cabinet is following him, making the argument for Bidenomics. As we try to figure out what's next for the Fed, is the job for Joe Biden in the year ahead. How are you guys tackling this?
Well, we do try to talk to everybody we can about what exactly the difference could be. In fact, we had Mark Malloch Brown, who's the former Deputy UN Secretary General, on to talk about, from a foreign policy point of view, what difference it could make. And we talked to everybody what difference it could make, really not knowing fully what difference it would make. But I keep hearing from people. Part of the concern is the sort of populist strain that goes both through Donald Trump and Joe Biden's theory when it comes to things like trade, for example, and protectionism, that there may not be that much of a difference. And the big issue is you don't hear much about the deficit. Even as the interest rates have gone up, you don't hear much about that. Neither side seems to want to tackle that. We just talked to Larry Summers just a few minutes ago, and he said he thinks that early on in the next administration, whoever that is, somebody's going to have to start dealing with the fiscal situation, that it's going to get pressing.
Well, David, we actually had a conversation on that earlier this hour with Maya McGinnis of the Committee for a Responsible Federal Budget, who did a little bit of fact-checking for us of what exactly was factual and not in the President's State of the Union last night when it comes to deficit reduction and what is going to be required to really do that in a more material way going forward as we await his budget on Monday. But of course, this Friday is not just Jobs Day or State of the Union debrief day. It also is International Women's Day. To what extent are you featuring that on Wall Street Week tonight, David?
Well, I'm glad you asked, because we do have Sally Krawcheck, a name well known to Wall Street, has had various very senior positions. She's now founder and CEO of Elevest. And they came out with a survey actually just this week about a major wealth transfer, not just in the United States, but globally, that will be going from men to women, as frankly, Kaylee, some of us guys die off and the women inherit the money, and what that will mean actually in investment. But we also asked her specifically about women, or the lack thereof, at senior levels on Wall Street. It's a bit better than it was, but certainly not where it should be. And this is part of what Sally had to say.
It's gotten better. It hasn't gotten better enough when you consider that women are 51% of the population. It's inertia. An object in motion stays in motion, an object at rest stays at rest. But it's truly important, and it's truly important beyond the, gee, I wish there were a handful of women who get to senior roles and do well. Good, yes, that matters. What really matters is that financial services is, of course, the lifeblood of our economy. And the research shows you that diversity is a driver of superior performance. That homogeneity, conversely, means you trust each other too much, you take on more risk. Thinking subprime crisis here, right? When you don't have that diversity of thought, perspective, background. So we should all care about diversity in financial services, because it is, again, the lifeblood of the economy. And we should also care because of, if we are a woman, we want to be reflected. If we're fathers and we have daughters, we want them to be reflected. And the industry, needs to do and will do, with more diversity, a better job for women, again, who are coming into a ton of money with the great wealth transfer.
Yeah, this struck me as a terribly important point. I'll go back 30 years ago now at Capital Cities, and Tom Murphy was the chair, and we went out to a management retreat out in Arizona we had every year with the top 100 or so managers. And he looked around the room, there weren't very many women. He came back and said, we're leaving half the brains in the world behind. That doesn't make sense for us just to be a good business. And he really undertook some extraordinary efforts to make sure we got some women to senior ranks at Cap Cities just to make better decisions.
Yeah, well, that makes a heck of a lot of sense, David. And I think the point here is that it's not only the right thing to do, it's the profitable thing to do. When we start talking about diversity, whether it's gender diversity or otherwise, she makes a great point. This actually enhances the product and the bottom line.
Yeah, exactly. And when you talk about that major wealth transfer, one of the points she made that I'd never thought of before is a lot of these families where there've been a couple and the man's made a lot of money, the woman's made a lot of money, they've put it together. The advisors speak to the husband and not to the wife. And when the husband dies, the wife has no particular relationship with the advisor, and she typically takes all the money and just puts it in a bank because she hasn't been dealing with a financial advisor, something I'd never heard of before. She said it's a major problem in financial advice.
I will say, Kaylee, I do know what that's like when you sit down with a financial advisor for the first time and they inform you that you're going to die a decade before your wife. It is an eye-opener. David Weston, great to have you, as always, the host of Bloomberg Wall Street Week. He'll be, of course, following Balance of Power here on Bloomberg Radio and TV. I've come to grips with that, by the way, and it's probably for the best.
It's got dark.
It did, yeah.
We'll have more fun coming up, I promise.
No one's going to die on this program, beginning with me. And Kaylee, this is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions. You're listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
Thanks for being with us on the fastest show in politics, with Donald Trump news dropping, legal news dropping today. Kaylee, this is important. We were waiting for word on this payment in the E. Jean Carroll case, $83 million. He's posting bond to cover more than that.
Yeah, you have to post 110%. If you're not paying it outright, the bond has to be greater. So the bond is to the tune of $91.6 million. And that just speaks to the idea, Joe, that as the former president is mounting a presidential election campaign and a multi-front legal battle from criminal and civil cases, this is pretty expensive stuff. Perhaps if there's good news for the former president, it is that his picks to lead the RNC, now that Ronna McDaniel has departed, Michael Whatley and Lara Trump are the new chair and co-chair. It's official today, and that may open up those resources for him to tap, at least in certain cases.
Yeah, I guess in that case, the transition is complete at the RNC in the likeness of Donald Trump, and something that we'll be hearing a lot about here. Ronna McDaniel has left the building. It's a new RNC.
It is indeed.
We need to find out what the implications, though, are of this update in the E. Jean Carroll case. And Eric Larson joins us, Bloomberg legal reporter from Bloomberg's world headquarters in New York. Eric, it's great to see you. I guess we answered the question about whether Donald Trump has the money. What can you tell us?
Well, for now, yes. He had a deadline of Monday to either post or either pay E. Jean Carroll the $83 million or post this bond to try to put it on hold during his appeal. By the way, a judge still has to approve this bond, so that'll probably happen next week. But, he has this much bigger bond that he has to arrange in the next couple of weeks. So that's an even bigger question there. But for now, this does answer the question about this $83 million issue. He has it. We don't exactly know what he put up as collateral for the bond, whether it was a cash or real estate or both, but there it is.
Well, and I think the other case you're referring to, of course, is the other civil case related to the Trump organization, where he has now been ordered to pay because of interest that has piled up more than $400 million in the case that the New York AG Letitia James brought. How does he get together that bond? Do we have any idea how hard it was for him to get this $91 million bond together? And then you got to, quadruple that for next time?
Right. So the total judgment against Trump in the New York Attorney General's civil fraud case is $454 million. He's going to have to post 110%, at least, maybe 120% of that to put it on hold during the appeal. And we know that even just in this smaller appeal in the E. Jean Carroll case, in that bond, he had some trouble there because he told the judge he wanted to delay delay the E. Jean Carroll bond for the same reasons he wanted to delay the other one. He had problems, putting together a bond, the cost of it, using his properties as collateral. These were things he did not want to do. Obviously, he went ahead and did that anyway. But he has testified in a sworn deposition last year that he had around $400 million in cash. Bloomberg Billionaires Index estimates he has $600 million altogether in liquid assets. So you can see that these combined verdicts automatically take up all of his cash and perhaps all of his liquid assets. So any surety company, those are the companies that arrange these bonds, are going to be looking pretty closely at what collateral he has and what the exact value is to make sure that they aren't at risk by posting these bonds.
Remarkable stuff as we spend time with Eric Larson in our remaining moments here on Balance of Power. March 25th, we'll all be watching New York for the start of the Stormy Daniels trial. Eric, will that actually begin as expected, or does he have any other lever to delay?
That trial is happening March 25th. It is starting. There's nothing that can stop it now. And it's going to last 6, perhaps 7 weeks. Stormy Daniels, as you say, she might actually be a witness. She might testify. It's also possible Trump might testify. It's going to be a really fascinating case. Obviously, we'll be hearing from his former lawyer and fixer, Michael Cohen. He's going to be one of the star witnesses in the case again, like he was in the New York Attorney General trial. So a lot of the same cast of characters here. But first criminal trial for Trump, first criminal trial for a former president is going to be unprecedented.
Yeah, absolutely. Eric Larson, Bloomberg legal reporter, thank you so much for joining us from New York. And as we talk about the criminal trial that I guess will begin in just a few weeks' time in New York, there do remain a lot of questions about the fate of his other trials, including the election subversion trials, like the one here in Washington brought by Jack Smith, related to the former president's actions leading up to and on January 6, 2021. And while President Biden in his State of the Union address last night did not directly speak to Trump's legal challenges or name Trump himself, just refer to him as my predecessor, he did, though, within just the first few minutes, talk about January 6th.
That's for sure. Interesting. Before the economy, before the border.
Before the border.
We got to insurrection, which I guess says a lot, but we're looking at April 25th now, correct, for arguments before the Supreme Court?
Yes, in the immunity question in that
Exactly, which would allow, or not, that Jack Smith trial to move forward. So we're not there yet. We've got about a month and a half before we find out if that trial will even be allowed to go back on the calendar, and at that point, no indication on where on the calendar it will fall. So the question remains, will it happen possibly before the election?
Yeah, so we don't really know what the future holds in that regard, but we do know what the future holds here on Bloomberg Television and Radio, because coming up just about a minute from now is Bloomberg Business Week with Carol Massar and Tim Stenovic. Carol, what you got on the show this afternoon?
We have a great guest coming up. We're going to do a deep dive with Kathy Wood of ARK Invest, of course, the founder, the CEO, the CIO. Wow. We have so much to talk about.
Amazing.
Macro, market, NVIDIA, some other names. We're looking forward to spending a bunch of time with her.
I'm guessing Tesla might come up after this weird run lately.
It may come up.
Yeah,
yes, indeed.
She was selling Coinbase last time I was reading about it. I can't wait. What time is she on, Carol?
She's coming up in just about 3 minutes. So,
Fantastic.
You guys say goodbye. We say hello to Kathy.
We do say goodbye. Give her our best, and our best to Tim Stenovic. Of course, you guys have a great weekend after the program. Kaylee, I'll meet you at 5 on Balance of Power. Bloomberg Business Week starts right now.
This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. I'm Carol Massar, along with Tim Stenovic. Let's get to the setup on this Friday, International Women's Day. We've got, of course, a market that is well off its highs at this hour. We've got a mixed jobs report, Tim, and I think investors trying to kind of work their way through it all.
Yeah, we did see record highs on the S&P 500 and the NASDAQ 100 earlier before stocks dropped back. Traders, though, betting that the Fed will start cutting rates in June. We're going to dive into all that and more with a special guest coming up in just a couple minutes.
That's right. In just a moment, we're going to talk with ARK Invest Kathy Wood, everything from the jobs report, really the macroeconomic, the macro market environment, and what she says has been one of the biggest mistakes in monetary policy history. So we've got a lot to unpack with her. We'll also talk a little bit about some of the flows into her spot Bitcoin ETF, some of what she's been buying, what she's been selling. Our deep dive coming your way, everybody, in just a moment.
Plus, more on the U.S. employment picture. We're going to be joined by Amy Glazer, Senior Vice President at the global staffing company Adecco. And Carol, I don't know if you have any spring break plans.
No, I'm going to be working.
Yeah, so will I. Well, we're going to talk a little bit about that later in the program and what's going on in Florida when it comes to spring break.
All right, everybody, let's get a check on that trade.
CBOE volatility index hits over a 2-week high, last up 1.02 points at 15.46.
NASDAQ 100 index all declining. Right now we are looking at a 30-point drop in the S&P 500 index, down 0.6%. Stocks are retreating after a rally that drove the market to multiple records this year. Traders weighing mixed jobs data. We've got the Dow down 37 now, down by about 0.1%. The NASDAQ Composite Index down 168, a drop right now of 1%. The 10-year 4.08% with the 2-year 4.47%. Spot gold up 0.7%, 2,175 on gold. West Texas Intermediate crude down 1.5%, 77.76 a barrel. Bitcoin, quite the story there, was trading briefly above $70,000 today. Bitcoin now up by 1.9%, and Bitcoin currently at 68,618. Broadcom is predicting that AI spending will fuel growth more quickly than expected this year, even as sluggish demand in other areas weigh on semiconductor sales. Today, Broadcom shares after earnings, they are down by 5.9%. So again, recapping, stocks lower across the board. S&P right now down 28, a drop there of 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, so appreciate it. Charlie Pellet there. Well, it is International Women's Day, and with us, a recognized, much talked about and followed individual, well-known investor who also happens to be a woman, and safe to say the person who ignited the investment thesis around the innovative and disruptive theme and economy just about 10 years ago. So let's get to our interview. Great to have back with us Kathy Wood. She's the founder, CEO, and CIO of ARK Invest, and she joins us once again from St. Petersburg, Florida. Hey, Kathy, so great to be talking with you again. How are you?
I'm great. How are you doing, Carol?
Doing well, trying to keep up. As you know, the news flow kind of fast and furious. Let's talk about the economic backdrop, because your roots, right? When you started out, you are an economist and you think about things, the macro environment, the jobs report today, some strength, maybe some concerns about things starting to slow down. What does the U.S. economic environment look like to you, the business environment as well, and what it means for some of your investments?
Sure. It looks like that corporations are losing pricing power, and we are now beginning to see the unemployment rate move up. It went up to 3.9% in this latest report, from a low of 3.4%. So undeniably, it's on its way up now. And we do think it's because corporations are losing pricing power, their margins are getting hit. It's going to cause a couple of things. One, the labor hoarding that we've seen since COVID is going to diminish, and that will increase the unemployment rate. But then the second thing is it will accelerate the adoption of technologies. Innovation solves problems. And one of the things that it does is increase productivity, increase efficiency, and create new products and services. So we're pretty optimistic about our strategy in this environment because interest rates should come down. I think that even the Fed is going to be surprised at how low inflation goes. We think it could be negative this year.
Well, so Kathy, let me ask you, that's interesting. I mean, if the expectations, at least according to traders right now, is that the first rate cut comes in June, is that too late in your view for the Fed to start cutting rates?
Well, I think the 24-fold increase in interest rates in little more than a year has shocked the system. We're beginning to see a reverberation of the regional bank issues We don't think they are going away. Deposits are still outflowing broadly from the banking system. And there are increasing problems with commercial real estate. Most people know about the office problems, but multifamily units, multifamily apartments, we're beginning to see some distressed sales there as well. So I think that's that problem isn't as well understood, I think, and it's going to cause the regional banks even more problems.
Kathy, how quickly do you think unemployment can go up this year? What are you forecasting over at ARC?
Well, I wouldn't be surprised to see the unemployment rate go above 5%. Now, I'm saying that knowing that this is an election year and that this administration probably will try and spend more than is currently in the budgets through executive order or what have you. But above 5% would not surprise us.
All right, so above 5%. Well, that's interesting. All right, so we have a good idea of your economic and kind of macro backdrop. Having said that, so here we are sitting at a day where we're seeing a little bit of a pullback in stocks, but year to date, the S&P still up more than 7%. We're looking at a NASDAQ 100 that's also up more than 7%. You look at something like the SOX is up around 20% year to date. Pick an individual name like an NVIDIA up more than 80%, and I could go on and on and on. There are many who talk about a bubble. Some liken it back to 99, 2000. Anything in today's equity trade that says bubble to you?
We do not believe we are in a bubble anything like we were in the late 90s. I was there, and the technologies weren't ready. The costs were too high, too much capital, chased too few opportunities too soon. The seeds for what is happening now.
Fed Goolsbee says the Fed is focused on inflation rate and not price level.
Bubble, and they've been germinating for 25 or 30 years. So we believe we're ready for prime time.
And Fed Goolsbee says it's not realistic to expect the price level back to pre-COVID.
Calling it the end of this at all is in the chip space. Whenever I hear the word shortage, and we started hearing about GPU shortages about this time last year, as ChatGPT was capturing the imagination of both businesses and consumers. So for about a year, we've heard that word, and now we're seeing lead times, we believe, come down for GPUs, for NVIDIA in particular, from the 8 to 11 month range to the 3 to 4 month range. So that is suggesting that there was probably a lot of double and triple ordering as the word shortage was making the rounds, and that those inventories will have to be digested.
But is that also because of an increase in supply in terms of output, or is it because you think demand is going down? Which one is it?
Oh, I don't think, no. Demand is not going down, though there is something we expect that I don't hear discussed very much. And it harkens back to the early days of the internet. There was a moment when the internet was taking off, when Cisco was all the rage. And then enterprises started thinking seriously about the need to spend aggressively on this new thing called the internet and the backbone. And they paused as a lot of competition started to make the rounds. And Cisco went down 50% plus as enterprises pausing. Now, why are enterprises likely to pause or at least go through an assessment? They have to integrate all of their data first. Proprietary data is the secret to AI's success. And they have to map out in excruciating detail their workflows internally and with suppliers and customers and so forth. And this is going to take time.
And Goolsbee says higher rates have contributed to rising housing costs.
It's going to be massive. But we think there's been a little bit too much too soon.
Well, it's interesting to hear you say that, Kathy, because you and at ARC were very early to acknowledge the impact of AI. Yet your flagship ARC Innovation ETF has not held shares of NVIDIA in about a year. You do own some of it in your other ETFs. Do you have any regrets about not having held on to the stock or actually increasing your exposure in the last couple of years after more than 530% gain since 2022, since the end of 2022.
Yes. So you're right. We were very early into NVIDIA 10 years ago when it was $5. Now it's roughly $800. And we rode it most of the way up. But I'll tell you what we did. And this is, as a portfolio manager, it's not one action, but what it causes in terms of another action. Last year, we sold in the flagship NVIDIA and put it into Coinbase. Coinbase, I believe, is up at least as much as NVIDIA. And it is much less well understood. The whole crypto movement, the crypto asset movement, Bitcoin as a new asset class and so forth, is not well understood or completely accepted out there. So we prefer to go where others are not traveling as much. And, as we were moving out of NVIDIA, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. NVIDIA happened to be one of the sources for that purchase. So it's not just what we do on the sell side; it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described.
Yeah, and to be fair, you're right. Coinbase is up about 620% since the end of 2022. So that compares with about 530% gain in NVIDIA. Is there anything, though, Kathy, in the NVIDIA story that would make you rethink the name and want to become more aggressive on it?
Yeah, if the price came down a lot, we would. The rate of return expectations
or a split. Would a split do it? Because I know we've been
no,
kind of
no. Okay. That wouldn't change. That wouldn't change anything. No, no split adjusted then the price. So if you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution. What we're seeing in the GPU side of things is NVIDIA, all praise to Jensen Huang. I mean, just unbelievable company execution, vision, and so forth. And it's not over. It's going to last a long time.
Fed Scoresby says expects less restrictive rates as inflation falls this year.
From AI, the productivity lift alone is going to be massive, the most massive productivity lift in history, we believe. And so this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip for the more specialized autonomous driving opportunity. And I think you're going to see a lot of companies developing more specialized chips. We know that NVIDIA, of course, will segment the market as well. So we just think that a lot of the assumptions for NVIDIA, that this is NVIDIA's market and it's alone, that those are changing.
Well, we're speaking with Kathy Wood, if you're just joining us. She's the founder and CEO and Chief Investment Officer of ARK Invest. She joins us from St. Petersburg, Florida.
So it's interesting, Kathy, too, everybody seems to be out there making chips. And it's funny, we had a conversation yesterday with Chris Miller, who wrote the book Chip Wars, and we talked about TSMC, that everybody can kind of design what they want, but ultimately right now they've got to come back to TSMC as the fabricator to make them. So as you say that, I mean, you guys in one of your funds, I think late last month, was selling shares of TSMC. I am curious about then your thinking around TSMC. There's a story today too about TSMC winning more than $5 billion in grants for their U.S. chip plant. So money, certainly being devoted to them. Why maybe pull back a little bit on TSMC, or what is your case for TSMC in the long run?
Well, the case for TSMC is, yes, it is the manufacturer of these merchant chips. So a very big story there. But this is simply a cyclical call. And it has to do with that word shortage. And TSMC, for example, Broadcom reported last night. I listened to that call. In the semiconductor solutions part of their business, they were up only 4%, AI up 35%, but everything else down. So there are some cyclical phenomena out there that we think are they're not being integrated into the short-term expectations for a number of stocks.
Hey,
yeah.
So, Kathy, I want to move on to Tesla because you brought it up a moment ago. You've been a long time bull on Tesla. You have been buying shares recently after selling them for most of 2023. The stock down about 30% so far this year. We covered the news this week that shipments from Tesla's Shanghai factory sank to the lowest in over a year in February. The challenges facing the EV industry have been well documented. We've talked about those a lot. Why do you still like Tesla, considering all of the challenges in the EV space and also what many critics would say are disappointing fundamentals?
So yes, you're right. We were selling last year as it was in the $300 to $400 range. It's back to $175. And this is what portfolio managers do. We have a 5-year investment time horizon for Tesla, and our price expectations from here, I mean, we see roughly a 7 to 10-fold increase. I know we're in the process of revising our model, so I'm not at liberty to give you the new number. But
would that new number be higher or lower than 2000?
Well, we're pushing it out a year, and therefore it will be higher because the autonomous taxi platform opportunity will be in full force, we think, and we believe that Tesla will get the lion's share of that market here in the U.S., if not elsewhere. Autonomous taxi platforms are SaaS models. Tesla's current gross margin is, well, it's in the teens right now because it's been cutting prices, but we think normalized, the EV margin is in the 30% range. SaaS margins are in the 80% range. Most analysts focusing on the stock have nothing in their models, or very little, for autonomous. Our confidence that autonomous is going to happen has increased because it has happened. We see Waymo successful. We see a lot of success and commercial success, that is, in China. It can be done. We think Tesla will launch a national service. And Tesla, this is where AI comes in. Tesla has orders of magnitude more data than all of the other auto and tech companies going after this market combined. And what's important about that is that it has corner cases that nobody else has. Rare occurrences on the roads that it has recorded and it is prepared for, but others aren't.
Kathy,
they just don't have.
I just want to jump in. It's kind of like a running joke with the Tesla community because Elon Musk says every year we're going to have this autonomous driving technology, and every year since he started saying it, 2017, 2018, it has failed to materialize. Why are you so confident it's going to happen in the near future?
Well, because it has happened, as I just said, and so it's not if, it is when. That's the most important reason. Interestingly, in his last conference call, Tesla's last conference call, Elon said, yeah, I know I've been wrong about it, so I'm not even going to make a projection. I actually thought that was good, and maybe it has a better shot now. And we're looking at some of their hiring and their job postings and seeing rumblings in different cities that they're starting to get ready.
Hey, Kathy, something I know I brought up this with you before, but I think back to you and my first interview back in May of 2014, so almost 10 years ago. But you brought up Elon Musk when he wasn't a household name or what his company was doing, and you likened him to Thomas Edison. And I guess what I want to ask you, you know this individual, you talk with him, you followed him obviously for a long time. Do you ever feel, do you feel that way still about him in terms of likening to someone like Thomas Edison? And how do you find clarity and feel comfort in some of the questionable and controversial things that Elon comments on or that he says?
Yes. Well, we're focused on the technology, and as is he. He is the inventor of our age, and this age is a very special age because the 5 major innovation platforms around which we have centered our research are converging, and 3 of them he is helping to converge. This autonomous taxi platform opportunity is the convergence of robotics. Autonomous vehicles are robots. Energy storage, they will be electric.
Right.
And artificial intelligence, where those are 3 separate S-curves feeding each other. And should lead to super exponential growth. He has understood this idea that technologies are going to converge with one another. And that is the way he's been thinking. He's first principles research. Just because something's been done one way for a very long time, think autos, doesn't mean it's going to remain that way. And that's why he's going to win.
Do you ever feel, though, that he gets distracted or can be too much? Yeah.
He is so laser focused on technology, and he, in the case of Tesla, the electric vehicle side, that is on automatic pilot. They are just scaling, and what he is doing is becoming, the manufacturer of factories. He's trying to figure out how to automate and continue to drive down the costs there. His focus is on autonomous now, certainly. And of course, you can say on X he's distracted, but he's really more focused on the innovation. How can I go back to the future where I started, which was in the payments app space, sold to PayPal? How can I turn this into not only a payments app, but an everything app? And I think he's hard at work doing that in ways that we don't know yet.
We are, of course, talking with Cathie Wood. She's the CEO, CIO, and, of course, founder of ARK Invest, joining us from Florida.
Hey, Cathie, you're talking about the future of transportation. We got to talk about Archer Aviation. One of the most read stories today is about the company that you've been buying up. It's a developer of air taxis, Archer Aviation. Your stake around 10% across several of your ETFs. You're the 3rd largest investor in the name. We should note shares down roughly 30% so far this year. As our own Sam Potter writes today, you are once again on the other side of a short call made by Grizzly Research. Last time you were in a similar spot regarding a different name, Too Simple. You lost a lot and eventually sold most of your position. So talk to us about why you believe in Archer, and does it ever worry you to go against these short sellers?
Our investment process is centered around research and original research. I'll start with Too Simple. We sold Too Simple after the CEO, who was the technology visionary, left. And so Grizzly got that right. I don't think for the right reasons, although we were in the teeth of a massive bear market as well. If that CEO had not left, I don't think we would have sold that stock. In the case of Archer, we have a high degree of confidence in Archer. One thing to understand about ARK is we are the closest. ARK is the closest you'll find to a venture capital company in the public equity markets. And we tread where others in the traditional asset management world will not go, at least on the public side, when we see a real opportunity. As we're doing our work on autonomous vehicles, we concluded that the cost is going to drop so much that roads are going to become very congested in the future, much more congested, if you can imagine, New York City. And so we then started doing work about transportation in the skies. Is it possible? Yes, it is possible. The FAA is the gating factor from a regulatory point of view. There are 2 companies the FAA is working very closely with, and I think because of successes elsewhere in the world, other companies are having success where regulators have not been as strict. I think there's been a little more pressure on the FAA to pay close attention here. And the 2 are Archer and Joby. Our confidence went up when Boeing, which was suing it for patent infringement, settled the case and actually took an ownership position in Archer. as has Stellantis and United Airlines. So three very deep-pocketed partners who are also trying to figure out the future of transportation. And we know that they're on their way, both Joby and Archer, to FAA certification. Seems like the process is in motion, and we haven't had a hiccup. And it has an MOU with Abu Dhabi to launch an air taxi service in 26. And pending regulation, it has an MOU with Interglobe to launch an air taxi service in India. Both of those have been much better from a regulatory point of view.
But how big of a concern is it to you that regulators here in the U.S. could drag their feet? We did speak with an airline executive recently who is concerned that the FAA is moving slower than other regulatory bodies when it comes to this type of technology.
Yes, and that is why we pay a lot of attention to regulatory arbitrage. We've seen innovation move abroad to other countries, even Amazon. The FAA wouldn't let Amazon fly its drones, 9th generation, nearly 10 years ago, on its own property outside. So it went to India and elsewhere. I think the pressure's on the FAA now. And I also think that the bear market of 21 and 22 eliminated a lot of other competition that was brewing. Just the funding markets were closed. And so I think this market is much more, that both Joby and Archer are going to have much more share than otherwise would have been the case. So we're pretty excited about the possibilities here.
Hey, Kathy, as you said, one of the things about ARC, it's certainly in its DNA, is that you go places and take positions that other people maybe don't do. And one of the things, though, that increasingly I feel like the financial establishment, again, is interested very much so is in crypto. And I want to talk about your spot Bitcoin ETF, if I may, the ARC 21 shares Bitcoin ETF. What can you tell us about institutional interest in it? Is there, or is it mostly the funds that are going into it are mostly from the retail side?
Well, we know there's institutional interest because we're talking to a lot of institutions, including state treasurers and public pension funds. And why is this? Because they're trying to figure out if this truly is a new asset class. And if it is, they must have a point of view. As a fiduciary, if there's a new asset class, which is uncorrelated or shows very low correlation in terms of returns relative to other asset classes, then what an asset allocator does is it will take a position to increase returns per unit of risk. That's what happens with low correlation of returns. So definitely, now, are they moving whole hog? Not yet. And nor are the big wirehouses like the Morgan Stanleys and UBS's, Wells Fargo, Merrill Lynch, B of A. They're all waiting to see who are the winners in terms of the ETFs, because they do not want to commit to an ETF that will close down. And
makes sense.
And right. So, and they're going to give it, from what we're hearing, 3 to 6 to 9 months. So everything, the net inflows that we've seen, and are away from those two spaces, really. It's part of it is our client base switching from GBTC into, and other client bases, into the ETFs, which are much lower fee.
All right, but I do want to also then go to the next level, and that is an Ether ETF being approved maybe in May. Are you optimistic that it's going to happen by that May deadline, or what obstacles might be still out there that it won't make that deadline?
Yeah, so the biggest obstacle is staking, and I don't think the regulators will allow staking in this first round, if they allow the first round at all. Now, we and one other firm will see our final deadline in May. If they reject our filings, then we'll have to refile. But my guess is they will move more now to a first come, first serve when this next round goes through. So if it's May, it'll be without staking. If it's later, there's a better chance for staking. If it's in, I would say 2025, because I think legislators and legislation is starting to get involved here and taking it away from simply the regulators.
Hey, Kathy, I don't want to leave without asking you. It is International Women's Day, and I think about your path. Tim and I have been talking a lot to many women who have made their way in male-dominated fields, and I'm just curious how you think about your trajectory from where you started and what you've achieved. You started two firms.
NYMEX diesel April futures settle at $2.64 a gallon. NYMEX gasoline April futures settle at $2.52 a gallon.
Those other individuals and other women that are out
And
there.
NYMEX WTI crude April futures settle at $78.01 a barrel. That's down 92 cents or 1.17%.
Your own bosses look brilliant.
And NYMEX natural gas April futures settle at $1.80.
Know so much more about technology and where the world is going, almost innately, than, shall I say, more seasoned investors. So just make your bosses look brilliant and educate them and, generate enthusiasm, excitement, energy around ideas. And make sure you have good mentors. If they're not giving you a good shot after you've made them look brilliant, time to move on. So that's one thing. As far as starting a business, I would say make sure there's an unmet need. In our case, in the case of ARC, what we saw was the traditional world going more passive or benchmark sensitive. When we saw an explosion of innovation thanks to the 5 major innovation platforms around which we have centered our research and investing. And so I said to myself, someone has to do this. And so we went off, and honestly, I think most people thought we would fail for a couple of reasons. One, we put a truly active, fully transparent equity portfolio inside an ETF wrapper. And that had not been done at scale at all. And no one, it was a passive world that we had entered. And then the second was we're benchmark agnostic. You can put us against any benchmark, and you're going to have to give us some time after the massive interest rate shock that we went through. And now we're on the other side and performing better as a result over the last year. But over time, these innovations are going to transform the world and create massive wealth with AI as back to that topic as the main catalyst. So we couldn't be more optimistic about innovation.
All right, going to leave it there. Kathy, as always, so appreciate all the time that you do give us. Have a great weekend. Kathy Wood, of course, the founder, CEO, and CIO of ARK Invest, joining us from Florida. Kathy, thank you.
Hey, let's go to Washington, D.C. now for a check of the latest world and national news, where we find Amy Morris in our 99.1 newsroom. Hey, Amy.
Hey, Tim. President Biden's campaign now looking to seize on any momentum from last night's State of the Union address. A travel blitz has begun, designed to grab voters' attention on his impending rematch with Donald Trump. Biden plans to visit 5 2024 swing states over the next week, starting with a trip to his birthplace of Pennsylvania today and a Saturday stop in Georgia, a traditional Republican bastion he narrowly won in 2020. His campaign will also launch a $30 million 6-week paid media effort, and they'll be hiring new staff and volunteers in swing states. The Republican National Committee, meanwhile, voted to install Donald Trump's handpicked chair, Michael Whatley, a North Carolina Republican who has echoed Trump's false theories of voter fraud. Lara Trump, his daughter-in-law, is expected to become co-chair. The move completes Trump's takeover of the Republican National Committee as he closes in on a third straight presidential nomination. A United Airlines aircraft ran off the taxiway into a grassy area after landing in Houston today. It is the third time this week, something involving the airline's Boeing's planes. 160 passengers and 6 crew members were on board. When the plane veered off the runway onto the grass, nobody was hurt. And today is International Women's Day. Every March 8th is meant to be a celebration of the achievements of women. Global news 24 hours a day and whenever you want it with Bloomberg News Now. This is Bloomberg.
the younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed market right now. It has been a volatile day. The Dow once again in the green. Dow Industrials up now by about 0.3%, higher now by 97 points, 3888 right now on the Dow Jones Industrial Average, 38,888. We've got the S&P down 12, a drop there of 0.2%, while NASDAQ lower by 98 for the NASDAQ Composite Index, down a drop of 6 0.6%. 10-year yield 4.08% with a 2-year now yielding 4.48%. Spot gold, right now we've got gold trading higher, little change I should say on spot gold, up by about 0.8%, up $16 the ounce higher at $21.76 the ounce. West Texas Intermediate crude oil down 1.2%. WTI 78 even a barrel. Cannot ignore Bitcoin today, was trading briefly above 70,000. Right now 68,704 on Bitcoin, up now by about just about 2%. So stocks are retreating with the S&P lower after a rally that drove the market to multiple records this year as traders weigh mixed jobs data. S&P down 10 right now, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So we talked about the jobs report and the labor backdrop and the economic backdrop with Kathy Woods. Just to remind you, we've been hearing it from Charlie as well, that U.S. jobless rate climbing to a 2-year high in February last month, even as hiring remained healthy, pointing, though, Tim, to a cooler yet resilient labor market. That is kind of our world where we get kind of mixed data points or even mixed facets in one data report.
Okay, well, speaking of the data, it's worth pointing out, even if you've been paying attention to it all day, the numbers once more. Non-farm payrolls advanced 275,000 last month. It followed a combined 167,000 downward revision to the 2 prior months. Remember, economists surveyed by Bloomberg for this month were expecting 200,000 jobs to be added. The unemployment rate, Carol, did rise to 3.9%. Wage gains also slowed.
Right, so some of those wage pressures may be easing. Hey, listen, let's get more on what our next guest is seeing. Amy Glazer is back with us. She's Senior Vice President over at Deco, and she joins us from Florida. Hey, Amy, good to have you back with us. We got the monthly statistics. We talked to a lot of individuals. What are you seeing specifically on your end?
Another resilient report. It shows that folks are still hiring and there's still opportunity for job seekers out there. So I think, no surprises in February and probably looking at the same trend over the next couple of months.
Talk more about that.
Yeah, and wage. I'm curious about, because we saw wage gains slowing. Are you seeing also signs of that?
We are. This is something I think we've been talking about over the last couple of months, but it's finally starting to translate. We're seeing not only just wages start to cool a little bit, but also no more sign-on bonuses, huge retention bonuses, all those extra perks. Instead, employers are putting those perks in terms of flexibility. And that's really what we're seeing is driving this labor market right now from an employee perspective. They want flexibility. They want time off. They want a work-life balance. They want to be able to select their own schedules. So employers are able to offer that flexibility and keep wages more in line.
Is that something you see being a permanent shift in the labor market? I mean, I hate to use the word permanent because this is something that's certainly ever changing, but is this kind of a sea change in the way that employees and employers think about their relationship with one another?
Absolutely, I do. And in fact, by 2027, they're saying that the gig workforce is going to outpace the full-time
Brent crude futures settle at $82.08 a barrel. That's down 88 cents or 1.06%.
Absolutely.
Wow. Hey, I want to talk a little bit about labor hoarding. Kathy Wood just talked about this with us. She said that her prediction for this year is that we're going to see less labor hoarding as the economy softens in the coming months. This concept of labor hoarding is one that I think is we're talking about post-pandemic kind of for the first time. Do you see that letting up at all? Is that something you see?
I would agree with Kathy. I think that will start to let up. We were talking about the Great Resignation for the last 2 years, and now we're on the Great Stay. So employees are choosing to remain at their job for stability.
Wow.
I want to go back to what you said about gig workers outpacing regular workers, because I think about the implications for that in terms of benefits, retirement. We had a guest this week that we were talking about how most Americans are not ready for retirement, not even close, and what's going to be the costs of that. But I do think about what are the implications of more gig workers versus full-time workers.
It's definitely interesting to think about, Carol. For the first time in U.S. history, we have 5 different generations in the workforce. So I think about my 19-year-old son who doesn't want a 40-hour work week. He doesn't want, that steady income. He just wants the money when he wants it. And we're seeing that in some of the generational trend. So I think it's going to continue to evolve over the course of the next dozen years. You know, we're in this peak 65 phenomenon right now where over 12,000 Americans are turning 65 every single day, which is also creating opportunity as they retire. More jobs are opening up. So I think we're going to continue to see a lot of fluidity within this market.
But Amy, what are you hearing from your clients that give you the indication that we'll have more gig workers? Are they saying, listen, we're tired of paying all the overhead of a full-time worker? Is that some of what's going on?
That's not what's driving it. What's really, truly driving it is the need for a stable workforce in terms of people showing up on time, productivity outpacing today. And they're really seeing that that's what the employee wants. They want that part-time schedule, and they need to be able to plan their work accordingly. So as technology continues to advance, it's enabling employers to reach workers that they haven't reached before and basically plan for any attendance or attrition anomalies.
Okay, so let's talk big picture about technology and the way that you think it will implicate employees in being able to actually
Azeri BTC crude oil exports from Ceyhan Port set at 16.55 million barrels in April versus 17.03 million barrels in March.
agreed.
All right.
And then at the peak, it's the new paradigm. Now, are we at the new paradigm? Are we agreed delusion? I don't know. But we're definitely not in the takeoff. And I would also say we're not in the denial or the fears.
Okay. Yeah, can you do the 7 stages of grief?
This feels like very like a philosophical way
I
of
learned
looking
something
at
today. I was like, oh, okay. I didn't know there were 8 stages.
What about like, so who is this good for? Like the investors, okay, who invest in it, the miners, like what groups work?
So, right now it's working for everybody because everybody wants in on it because they don't see the other side of that parabolic uptrend. Over the last, I would say from 50K, I mean, let's face it, or at least to me, I think that there's not strong fundamentals for Bitcoin and crypto, or at least not widely understood ones. You can say, well, the creation of the ETFs this year really
halving.
What's that?
The halving.
The halving, yes, you're correct about that. So, but I would say that also goes into price. So this is a great marketplace to chart. It charts very, very well.
But this is, I mean, you are like an expert on like technicals and how that moves the market. And we know the fundamental story is a little bit tenuous here.
Yeah.
But you also understand supply demand. And we talk about the halving. We talk about these 10 spot Bitcoin ETFs that are trying to hoover up as much coins as they can get their hands on here. I mean, isn't that
So
enough?
that's all showing up in the chart.
Okay.
The chart, like at the end of the day, you're just trying to see if the buyers or the sellers are in control.
Yeah.
And if you assume that the buyers are buying at the lowest price possible, sellers at the highest price, and all the information that we don't know comes in, that's sort of playing into that. Right now, since about 50K, maybe even 40K, it's parabolic. And a parabolic uptrend per physics cannot hold. It's a 90-degree angle. Now, there's at least one exception to that, Tesla. Tesla never, and in 2012 or 2014, that trend never really reversed. So right now we're in the mania stage, but it's interesting because over year to date, to your point, Alex, Marathon, it's down 20%. Riot is down a little bit. So the miners aren't up in the same way. You were mentioning MicroStrategy. I remember back in the day when it was a pure play software company.
Yeah.
Now I think of it as this almost principal trader, or you were saying hedge fund.
Yeah, it's a crypto hedge fund.
Yeah, I mean, it's really sort of amazing. So over the last month, let's guess, in February, how much do you think that MicroStrategy was up?
50%.
104%. So if that's not a definition of a mania, tulip mania, bubble, I'm not sure what is. I'm glad to provide a little entertainment here, but I do think it's real. I mean, if you take a look, the last time we had parabolic uptrends in Bitcoin, it reverses each time. We don't know when. I mean, this could go to 80 and then reverse, but people want in until they suddenly want out.
All right, Abigail, thanks a lot. Really appreciate it. But interesting when you pair it with what Katie Kriske was saying is that there's allocation. Like everyone needs to have some allocation.
Yeah.
It doesn't mean you can trade it or you can kind of ride it out, but some allocation in your portfolio to sit.
But isn't that demand for allocation going to increase? And if that does increase, where's the supply?
I don't know.
Oh, okay.
Coming up, Diane Jaffe, Senior Portfolio Manager over at TCW, joins us with her top stock picks. As my daughter says, oh. This is The Close on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Market on close imbalance, currently sitting at 1.2 billion to the buy side, just waiting for the final orders before we call it. Market on close imbalance, 1.3 billion to the buy side.
This is the countdown to the close. Romaine Bostick alongside Alex Steele. And I got some bad news for you, Alex. I was keeping an eye on the S&P 500 to see if it was going to crank out another weekly gain. It was tenuous when we started the show, and as of right now, that weekly gain is no more.
Can't make it happen?
Yeah, sorry.
It's just going to roll over?
Yeah, well, we still got 10 minutes.
But we knew this, because yesterday, what was my opening line? Hey, I'm feeling better about the rally. So obviously today, everything was going to fall out of bed. So the S&P is down, as Romaine was saying, 6/10. You got the NASDAQ 100 also off. You have the Russell now in negative territory. I mean, pretty much flat. But I want to try on Tesla here, because that's down 2%. And my broader question is, Romaine, if you have Tesla and Apple and Google, if they continue to kind of weigh and they can't find support, what does that do for the overall index? Now, it just then begs the question that other sectors, healthcare, industrials, financials, do they have to make up what Tesla and Apple and Google are dragging on the index?
And they might. And I'll steal a comment that one of our guests made earlier this week, said that, look, it might have been good for, at least now, it might have been good that all those stocks sat out the rally earlier. Those 493 stocks sat out that rally that we had over the last year or so, because maybe that means they do, at least in aggregate, have the ability to sort of resurge and lift the market up, assuming Apple, Tesla, and the rest of the Magnificent Seven fail to do their job. Of course, the macro is still in focus. We got a jobs report this morning, mixed to be sure, but it did maybe offer some clues about the Fed's rate path. Julia Coronado stopped by the program earlier. Take a listen to what she had to say.
Our own forecast is for 125, so steady pace starting in June of 25 basis points a meeting, partly because we do expect after we get through this kind of beginning of the year noise that inflation will do what it did last year and drop down to a new range and really outperform the Fed's expectations.
Joining us right now is Diane Jaffe, Senior Portfolio Manager at TCW, to help us count down to the closing bell. And Diane, I am curious, I mean, are we still in that focus right now where rate cuts, and more importantly, where rates end up, are still going to be the primary determinant of where the equity market goes?
I'd like to see that fiscal policy still has some legs to go. We have a lot of
new monies coming into the investments and capital investments throughout the economy. I think that's important. I don't know if we really need all the rate cuts that some people were hoping for.
It's interesting to see some of the rotation we've seen in this market away from the Magnificent Seven and into all those names that everybody seemed to have forgotten, or at least some folks had forgotten here. You've seen a pretty big rally in those names, and we were talking yesterday about the S&P Equal Weight Index finally hitting a high after 500 plus days of lagging the broader market.
We track all the sectors every day because what we really want to see is more breadth, and we have been seeing that. It has not been just comm services and IT. We are now seeing financials participate. We see consumer discretionary, industrials you were talking about earlier. I think that is going to be part and parcel with a growing economy, and when many people were worried about recession.
So what do you like right now? What are some of the top picks?
So one of our top picks is newsworthy today, which is Broadcom, right? They reported last night, and even though it was pretty good, the concern was maybe some of the telecom spending was dampening down their extraordinary AI ramp.
And does that mean that you don't like NVIDIA, or does that just mean this is a better value way to play?
It's a better value way to play. We love NVIDIA, but it is too expensive for us. It's really in the hands of your growth portfolio managers and clients.
I was looking at some of the other top 10 picks. There weren't a lot of sort of high-value tech names on there. I look at industrial companies, healthcare companies, and even media companies in there.
Yes, Comcast for sure, JP Morgan, GE, you were talking about earlier. They, Lennar in the consumer discretionary space, I mean, that's really been pretty nice.
And you think something like Lennar? And you think that has more juice in it? I mean, because that's had a pretty good run, too.
It has, and it's still trading really attractively on price to book. They're asset light. They're going to be reporting next week, so of course we will be waiting to hear what they have to say. But the first-time home buyers is still super strong.
Let me ask a question. If we get a 100 basis point cut from the Fed this year, so we get, say, 4 cuts, what do these companies do you think? Do they invest a lot more? Do you get the sense that there's a lot of pent-up demand? Or is it just steady as she goes for these guys?
So I think that it will lower the cost of capital for people. It will really help mortgage rates. I think that's if you think about the multiplier effect for every new home purchased, it's literally 2 to 4 times. So that is another spur to the economy, and lower mortgage rates will definitely be a positive for new home buyers.
For the overall market, do you think that 4 cuts spurs a bigger rally? Does that bring us into bubble territory, or do you think that it's more of a rotation within the market?
I would accept more of a rotation, right? I think you have NVIDIA, and it's grown 400% or whatever over the last couple of years. Some people are taking profits, including some insiders. We've seen it. Meta and other big high-flying comm services or IT names have been taking profits.
So when you look at sort of overall allocation, portfolio allocation, are we at a sort of inflection point where people need to start thinking about rejiggering that in some meaningful way, or is this kind of a stay the course until we get a little bit more clarity?
Well, one of the things that we really focus in on for us and our clients is that we're always going to be diversified across all 11 major economic sectors. We think that's really important for the long run, although you can get these spurts in different sectors like IT or comm services that really, rally everyone's enthusiasm and attention. But we think that once investors started feeling better about the shape of the economy, that's when we started seeing the breadth happen. And so I would like to have your viewers say, you know what, maybe there's some other places that I can invest and get a good return today.
You need to have some confidence, though, in economic conditions, or at least where you think they're going, right?
That's right, and the consumer sentiment numbers are pretty good. The macro is definitely seeping in after we had a fantastic fourth quarter earnings season. So there's usually that lull between companies reporting and the next earnings season, and that's when the macro comes in. So please expect a little bit of some volatility here.
Just to end, you have JP Morgan on your list, you mentioned it. Do you not like the regionals at all? Is it just bigger is better when it comes to the big banks?
It's so interesting.
She literally made a face like she was going to throw up. Let's just put it that way.
Historically, regionals have outperformed and had higher valuations, but, there's just so much uncertainty about what's on their balance sheet. And, of course, we've seen companies have to write them down. So, universal banks really have been a safer place to be.
All right, Diane, always wonderful to talk to you. Diane Jaffe, Senior Portfolio Manager over at TCW, helping us count down to those closing bells. We're about 3 minutes until we get to those bells, Alex. Seeing stocks right now around session lows, erasing pretty much all the gains for the day, and it looks like for most of the major indices, erasing all of the gains for the week.
Yep. I'm still really interested in sort of what do we look at after this?
Yeah.
Like, do we just look at price action until we get more economic data? I mean, we got all the juicier stuff. Earnings are done.
Well, I mean, you still got the big Fed meeting in a week and a half's time. And then from there, I think it is going to be a kind of a technical-driven market, maybe till you get back to the next earnings cycle. I do want to point out, and this is just for you, Alex, I did see the latest CFTC data coming in. What the hottest trade out there right now is gold.
Really?
Yeah.
The most longs in gold?
Biggest weekly, well, the biggest and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Seal. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast. Scarlett Fu stepping into the television studio. Carol Masser and Tim Stenovic just starting their day in the radio booth. Welcome to our audiences across all of our Bloomberg platforms.
Under the mattress.
And I cannot hear myself speak above the din of Carol Masser. Happy Friday, Carol.
This is what it's like to be a woman in our world today.
Happy International Women's Day, Carol Masser.
Happy to you as well. Interesting day, different tone. It's been a busy, jam-packed week with a lot of stuff going on. And of course, that big monthly jobs report that once again, I was talking to Mike McKee in the newsroom. I'm like, Goldilocks economy, can we say soft landing? And he's like, maybe Goldilocks. But what's happening is we continue to get data points, right, where there's kind of a mixed bag of data, and it can be somewhat confusing when it comes to investors trying to figure out what happens next.
Yeah, I mean, look no further than what we saw in the equity markets today. We saw new highs on the S&P 500 and the NASDAQ 100, only to see reversals late morning when it came to chips. And now it looks like we're going to see these equity averages move lower on the day today. Bitcoin's an interesting one. I can't explain it, but it hit a new record. It hit a record today, I should say. Still above $69,000 per Bitcoin. Scarlett.
Yeah, it got to 70,000, but it failed to hold at that level. And it was right around that time that it and the NASDAQ 100 both reversed course and turned lower. So maybe the fact that that 70,000 level was just, a blip meant that people were saying, oh, you know what? Heading into the weekend, we don't need to be testing this level again.
You know what we haven't talked about? Cruise stocks. Did you know Carnival, second best performing stock within the S&P, Royal Caribbean also doing well too? It's like, you're going to take cruises? How bad can the economy be? Like, you're still spending a lot of money on that. Those things are expensive.
Isn't that like recession proof though? I feel like the cruise lines.
They probably want you to think that.
Yeah, all right. Well, there you go. I mean, if it's any consolation here, I mean, only in sectors right now that really performed, at least on a daily basis. You're going to find that in real estate, energy, and utilities. The net effect of it all is red across the screen on the day and on the week. A Dow Jones Industrial Average down about 68 points or 0.2%. The S&P down about 34 points or 0.7%, while the NASDAQ Composite sold off by about 1.2% here on the day. The NASDAQ 100 down 1.5%. And the Russell 2000, that was your relative outperformer, though still in the red, down 0.1%.
I'm glad you brought up Carnival. Stifel seeing 2024 guide boost on strong demand. So basically, they looked at healthy booking patterns. So apparently, Alex, I guess people are taking cruises and they're booking way out. So some optimism there. But the stocks, I'm just going to flip around. The stocks coming under a lot of pressure. So that's not where we saw investors moving into. Maybe moving into cruise line stocks, but not into semiconductors. We know Broadcom and Marvell both coming out late last night. And that certainly has put some pressure on the trade. The stock's down about 4% today.
Yeah, that was a 1-2 punch for the tech sector as a whole, because if you look at the 11 industry groups in the S&P 500, the biggest slice of the pie belongs to infotech and semiconductor stocks, leading the way down there. The group falling 1.8% as a whole. Consumer staples down about 0.8%. Materials also under pressure. There were 4 sectors in the green, led by real estate investment trusts, energy stocks, and utilities.
All right, guys, let's get to some
Nvidia closes down 5.6%, the biggest decline since May.
Later in the trade as the markets move down here. So having said that, Carvana, though, staying atop that list, but way off its highs of the days. At its highs up almost 14%, finishing the day with a gain of about 7%. RBC out, issuing an upgrade to sector perform. They doubled the price target on the name to a street high of $90 a share. Stock, about 32% of the float is shorted, so just keep that in mind. That's kind of interesting. Stock still has had quite a run up, more than 60% year to date. RBC saying the stock has the potential to trade even higher, and an underperform rating is infeasible for the foreseeable future. Another one, Biogen. It was among the top gainers in both the S&P 500 and the NASDAQ 100 after Eli Lilly said the FDA is delaying its decision on its Alzheimer's disease drug. So that meant for Biogen, which makes a different drug, its own Alzheimer's drug, that received FDA approval to treat Alzheimer's in July, or starting in July, I should say. So Biogen was up about 4% at its highs, finishing the day with a gain of about 1.8%. And one more, it was a pandemic darling DocuSign, up 10% at its highs today, finishing the day just under 5% gain here at the close. The company coming out reported fourth quarter results, beat expectations. It also gave an outlook that is seen as strong. We talked about that one late last night. So again, some of the outperformers in today's session, Tim.
Okay, there were no shortage of underperformers. It's actually hard for me to choose just four, and I did choose four today. I do want to actually hit an extra one. Broadcom closing down 7% in its biggest drop since March of 2020. We did see a reversal in the chip space today. In the late morning, NVIDIA had hit a new record, had hit a record before falling as much as 6% to finish the day down by 5.6%. In a sign of how far NVIDIA has rallied just this year, at one point in the day, a relatively small drop erased more than $140 billion in market value, which ranks among the biggest single-day value destructions in U.S. stock market history. So that's how far NVIDIA has come in such a short time. I do want to check in on shares of Costco. They did finish lower on the day today by 7.5%. It's the biggest intraday decline since May of 2022. The company reported second quarter revenue and gross margin that did not meet consensus estimates. And then Marvell Technology, another one in the chip space, fell as much as 11% earlier in the session, but ended up finishing the day finishing down 11.36%. The company did give a first quarter forecast that was weaker than expected. Analysts said that AI was unable to offset weakness in other parts of the business. And an honorable mention is Amylyx Pharmaceuticals. This company just plummeted today after its drug for ALS failed to benefit patients in a trial. It suggests that U.S. regulators may have approved an ineffective treatment. Look at this, guys. Shares finishing the day down by 82%. Remember, this is a $160,000 a year treatment for ALS, and it gained full FDA approval back in 2022, despite uncertainty around it.
That chart kind of doesn't do it justice,
It really
right?
doesn't.
I mean,
you need
been
a
down there
two-day
all
for
day.
that. It's basically like draw a line on the bottom.
Yeah.
Just look at the top right. Just look at the top right corner, that big number.
For the
in red.
week,
That's all you need.
unofficially, the
there is
S&P
something there.
500 gained
All right, guys, looking at yields.
0.95%, the
Honestly,
Dow
it was
dipped to
snooze fest. The action more on the front
0.93%,
end. You
and the
saw a lot of buying
NASDAQ
coming in when
advanced
that jobs number came out. You had yields down
1.74%.
by a few more basis points, but ending the